Welcome to my Tips to Financial Independence channel. I hope you're enjoying the content. It's a pleasure to have you here. Today I'm going to talk about taxes on stocks. Please remember to like, share, and subscribe. Before you up and sell your stocks, here are three things you should know regarding taxes and how you can pay less in taxes. Please stay tuned until the end so that you do not miss important information. Number one, hold your stocks for more than 12 months. Stocks are taxed on gains made. The two types of gains are short term and long term gains. Short term gains are those gains from investments that are held for a year or less, and long term gains are those gains from investments that are held for longer than a year. You only pay taxes if you cash in your stocks. Taxes on stocks that are held for more than a year range between 0%, 15%, or 20%. If you're in a higher income tax bracket, it's best to hold your stocks for more than a year so that you can pay the lowest tax possible. If you're in a higher income tax bracket and sell stock that you've held for less than a year, you will be taxed as ordinary income under your income tax bracket. If you're single in 2022, you will pay 0% on long-term capital gains if you earn $41,675 or less. You will pay 15% in long-term capital gains if you earn $41,676 to $459,750. And you will pay 20% in long-term capital gains if you earn $459,750 and above. Number two, taxes on dividends. Ordinary dividends are taxed as per your income tax bracket. Qualified dividends are taxed the same as long-term gains. If you're in a higher income tax bracket, you'll likely pay more taxes in either scenario. Consult your CPA to learn what type of dividends you hold. It's best to hold your dividends for more than a year so that you can qualify for lower taxes. Number three, 4 ways to pay less taxes on gains from stocks. Number one, holding stocks for longer than 1 year can decrease your taxes. Number two, hold your dividends longer than a year to help qualify for long-term gain taxes, which tend to be lower. Number three, if you sold stock at a loss, leverage your losses against the gains to lower your net gain so that you can pay less taxes. There's a limit on how much losses can be deducted. Number four, hold your stocks inside the 401k, traditional IRA, Roth IRA, or any tax advantage accounts. For example, the dividends and stock gains inside a traditional IRA are tax deferred until you make withdrawals. Dividends and capital gains inside a Roth IRA do not incur any taxes whatsoever. Capital gains and dividends from stocks held in a 401k grow tax-free. You're only taxed during withdrawal after you reach 59 and a half years of age according to your income tax bracket. I hope you found this information helpful. Please check out the other videos on my channel. Take care.